Hello, everyone, and a very warm welcome to today's cryptocurrencies update for Friday, December the 13th, 2024. Normally, this is a bad luck day, but across the board, it looks pretty lucky to me. So let's just review the cryptocurrencies that we track, because the power of repetition is what is used, of course, in commercials. So we remember nothing has changed our perspectives. And we also want to go over Ethereum's bigger picture upside targets using Fibonacci, and of course, assuming we will see 5 waves up. If we do see 5 waves up, then I think we can eventually look for 10 to 15,000 in Ethereum. And for those that have been me for a long time, you know that has been my long-term upside target. And it now seems that is possible, and we can start using Fibonacci with a few assumptions, but those are very reasonable. So we're going to use Fibonacci, and we'll have fun for it for Ethereum. Everything else is still on track. We believe Bitcoin is still en route to about 115,000, from where we could expect a much larger correction, 50 to 76, 62%, something like that. It could drop it back to about 60,000 before we begin our run to well over 200,000. So there you see that if you would stick with it at 115,000, you might get a double. But if you would rebuy it at, say, 60,000, you might get a triple, plus maybe even quadruple. That's the difference of selling low and buying high instead of holding on. But it's all fine and dandy, whatever you choose to do. You can also hedge, of course. Whatever you choose to do, it's all good, as long as you sell for a profit eventually, and as long as you have a exit strategy in place. An exit strategy is what most people lack, and that's why they're not good at trading. So how does 10 to 15,000 sound like for Ethereum? That's what we're going to go for. Again, assuming we'll see 5 waves up, and those we don't have in the bank just yet. So it might be a little bit preliminary, but this is like a bigger picture, kind of back of the envelope, reasonably well-educated guess. Why? Because we believe Ethereum is in this wave 1. It is probably somewhere close to this wave 3, 4 setup, and then a final 5. And then we get the wave 2 pullback, and then a 3, a 4, and a 5. Okay, that's what we're looking for. So it's time to start, thinking about this top here, this low here, and these highs. That's what it's time for now. That is amazing. Not too long ago, in October, we were not too keen on Ethereum, and we said it had to break above 2,800. If it would break below 2,100, that was the August 5th low, we could visit triple digits. But we said if we break above 2,800, then we have to don our bullish hat. And that's what we've done. And that has been highly effective so far. That is the beauty of the Elliott wave. That is the power of using price and price only, because only price matters, nothing else. Nobody cares about your opinion about Ethereum or Binance Coin, whatever. It doesn't matter. Everybody's opinion is aggregated into price. And that's all that we trade. And that's all that triggers our trades. So let's go then straight to the charts and start off with good old Binance Coin. Nothing has changed too much in that we can either do this subdividing wave 3 as a ABC once again. Wouldn't surprise me if that's the case. We're seeing some nice bullish candles over the last 3-4 days develop. And it requires, of course, a break above this B wave high here at about 770 to target then into the 850. And then we get a very extended, very subdividing wave C of 3. And then a pullback for 4 and then a 5. And here I'm just working with the space available. But in this case, wave 5 will probably go into the thousands. Okay. Not an issue whatsoever, considering that already most of the year we said, it looks like we're still missing a 5th wave. We weren't certain about that because there were technically enough waves in place, but the market decided by breaking above the all-time high that 850, that target that we've had for a long time, would be reached. We haven't gotten there yet, and now it's simply a matter of how we're going to get there. Are we going to get there in this ugly, overlapping, subdividing way, or are we going to get there first a little bit down and then up? either way, we are going to get there. That is pretty much 19% guaranteed. Can you have a 90% guarantee? Yes, you can. So then we move on to Bitcoin. It's a little bit lackluster over the last 2 days. That's why I didn't provide an update yesterday. But we haven't broken below any warning levels. I've raised the first warning level for the bulls, which is pretty much today's low, which is equal to yesterday's low, which is equal to the 10-day simple moving average. But the chart starts to look reasonably bullish, and you can really see that if we get a nice breakout, what the symmetry target would be. So we kind of have this triangular pattern setting up here, right? You see this pattern here, right? So that would mean we have to get above, on a closing basis, about 102,000. I really like to see 104,000. That would really take out this wave 1 high. So then we are in a confirmed wave 3. But you can already see anything above about 102,000 will get us pretty close for that breakout. And that is, of course, on a daily closing basis. Everything, if we show a daily chart, you have to have daily closing prices. If you show a weekly chart, you have to have weekly closing prices. Okay, and weekly closing prices or daily closing prices in this case are, of course, based on London time. Everything is centered around London time. And here you can see how we then have symmetry targeting exactly that 113,000 there, this level. Okay, so somewhere between 112 to 116,000 is what we're going to look for. Okay, this is still a nice triangle. I like it. Symmetry targets exactly that. Okay, above 102,000. So if you desire to go long, you can be aggressive by a close over 102,000, or you can wait for 104,000. And if you're still long, of course, there is no reason whatsoever to sell because we're not below any critical level. From a long-term perspective, I'll show you that here. We do need to break pretty much below 74,000, this level here, the wave 3, with a severe warning below 87,000 from current price levels, okay? Not from 115,000. We're not there yet. Then things change a lot, okay? 115,000 changes things considerably. This is in the current wave count. So you can see there, we have a nice setup there in place for that advance. And let's see if we can get a daily close over 102. Things look bullish. So this is our preferred wave count. If we do break down, then we have our alternative, and we are then topping for a B wave, and we still see a C wave a little bit lower. And I think we can raise that C wave target again, probably right there in the ideal wave 4 target zone. Okay, which is anywhere between, I would say, 85 and 95 and 92,000, somewhere around there. So this level here, so it's 84,600, 92,500. Okay, so that is what we will be looking for on a breakdown, right? So we know exactly which levels need to hold. And if we go below all these lows, with, of course, severe warning below Tuesday's low, then we are on our way to complete this wave 4, and then another 5 into that 115,000, and then lower. Okay, this is our alternative. Why? Because the chart is 100% bullish, so we must keep a bullish perspective. And then this is our bigger picture, wrapping up the 3-4, 3-4, 5 into this 115,000, and then this quite steep wave 4 decline. The red wave 4 was a 50% retrace, okay, of all of red wave 3. And this black wave 4 here in 2021 was almost a 62% retrace of this black wave 3. So anywhere between 67,000 and 56,000, assuming we get to about 115,000, can be expected. Okay, that brings us all the way back into this digestion zone, which is similar to what we saw here, right? This type of price action we saw in 2020-21. And also this entire wave 4 here, the red or the blue wave 4, is about a 62% retrace of all of wave 3. Okay, I don't have it here on this chart, but I think I've shared that with you before. So it's quite common for fourth waves to be that exceptionally deep. In the stock market, fourth waves tend to be about 38 to 23.6%. On smaller time frames, we tend to see that, the micro and the minute ones, but on these bigger time frames, Bitcoin is quite devastating for most people. And you can also see that here, right? So you're retracing pretty much all of this wave 5 here, okay? This old rally, okay? That's quite common for a fourth wave. All right, so now we're going to move on to Ethereum. So we still don't know if we have completed a 3-4 sequence and now in this wave 5. So everything is still with question marks, right? Except, of course, the orange 1, 2, 3, 4, 5. Those have been confirmed, as well as the 1, 2, 3, 4, 5 in blue. Those have been confirmed, but we haven't confirmed the gray 5. If we do that, all we need to do is pretty much go above the previous high here at a little bit over 4,100, I believe it is. That will confirm the gray wave 5. So we can then take 2 more question marks, actually 3 more question marks off the table. All we left then is this 3, 4, 5. And of course, the further we advance in a impulse fashion, the more likely it is indeed an impulse. So for now, the impulse is our preferred path forward, continued on holding above 3,500 at a minimum. If we drop below 3,000 on Ethereum, it really increases the odds that we're not in an impulse anymore. And of course, below 2,100, the August 5th low, I think was 2,122, something like that, all bets are off. But if we go below 3,000, it would already start to become very dubious if we would ever see this wave 5 sequence, right? But so the 3, 4, 5 is our preferred path. That's what we're sticking with for now because so far it's following along. Whatever the exact wave count is on here, we've nailed these target zones, right? The 3, the 4, and this 3, 4, this 3, 4, etc. So it's very extended, but that's fine. So let's then assume this wave 5 will target 5,100, okay? So we bottomed at 2,100 and then we go to 5,100, okay? Somewhere around 4,800 plus or minus 2. Let's make it a round number. So then the whole direct path higher for this wave 1 was $3,000 from 2,100 to 5,100. Most of the time, the wave 2 tends to retrace 50 to 76.4%. Let's do the middle, 61.8%. Okay, so then we have our wave 1 here in red, and then the wave 2 will then probably go to about 32.75-ish, somewhere around there. That's a 61.8%. It's a little bit below current levels, of course. And we believe currently that that wave 2 could coincide with the larger wave 4 for Bitcoin. Okay, so please keep that in mind. And then the wave 3 in Ethereum will then coincide with the larger wave 5 in Bitcoin. So this wave 4 in Bitcoin will likely coincide with the wave 2 for Ethereum. Okay, and then this wave 3 in Ethereum can then coincide with this wave 5 in Bitcoin. Wouldn't surprise me because Ethereum and Bitcoin are always a little bit out of sync. Bitcoin already bottomed Bitcoin bottomed in December last 22, and Ethereum already bottomed in the summer of 22. Likewise, Ethereum topped out before, I believe, Bitcoin did. Okay, so actually it topped out here in October and Bitcoin in December. So we can be a few months out of phase, which is fine. It's just a mental exercise. So back to the numbers, 32.75. If we do a simple 161.8% extension, we get all right to 10,560. Okay, 200% will then get you pretty close to 15,000, assuming a log scale. Okay, and even in a linear scale, if you do 4 times the length of wave 1, a normal Fibonacci extension for a fifth wave is 2 times. So wave 1 is about $3,000 times 2 is 6,000. We start off at 3,300. 6,000 plus 3,300 or 32.75 gets you already very close to 10,000, right? 92.75. So it doesn't take much to get to 10,000. If we see an extension on a linear scale 3 or 4 times, 4 times 3,000 is 12. 12 plus 3 is 15,000. Okay, it's very realistic numbers for cryptos, because cryptos do tend to see much larger extensions in their third and fifth waves than a standard Fibonacci-based impulse pattern, which is 200% for wave 5. So there you see, that's why it's not outlandish to look for 10 to 15,000 for Ethereum. So we have a lot of upside potential. Currently, we have, in that case, 300% upside potential and about 30% downside risk, right? 50% downside risk. All right, so that's Ethereum. We covered that one, and we already know our bigger picture upside targets for Bitcoin. We believe it's going to top out 115,000, drop here to, say 65,000, and then we can rally to 200,000 plus, with the potential of only targeting 180,000 for odd Fibonacci extension. But we'll get there. We don't have to worry about it yet. That's still about a year out. Let's move on to Link. Link still targeting nicely the extensions for the 3, 4, and 5, well into the 50s to 60s, potentially much higher. Okay. Also here, we're going to, of course, start looking for extensions of the third wave. But this is still our preferred wave count. We haven't broken below any key levels. So Link is on track. Let's move to Solana. We still believe Solana bottomed this week. So as long as we hold above this week's low, we can target to 80 to 85 in the subdividing wave 5 or 3. Pullback for 4, pullback for 5. This one is, in our opinion, still not done. A break below this week's low would not be a good sign, and we have to reassess our wave count. We might be off by 1 wave degree. Then this would be a red wave 4 instead of a green wave 4. But for now, we don't believe that is the case. And we're still missing another wave higher from the August low. Again, 300 based on simple symmetry, flags and all that stuff. The bull flag is still the target, and we haven't really gotten there yet. We got to about 270, so we're still missing a wave. Then we're going to move to Riot, and Riot did not follow a daily impulse pattern lower. So we believe it completed its C wave here at $10.70. Then we have our B wave high here, if you can see my cursor right there. And then we have 1 down and then 2 up. That is this candle, that is 2. And then we have 3 down, and then the higher open on Tuesday was the 4, and then Tuesday's low was 5. Okay, and then we have some sort of, I would say flattish type of wave 2 in black. And we should now be in the starting gates of this wave 3. Plenty of room left to the upside for money flowing back in. And of course, we want to see Riot break above this downtrend line that has been in place for quite a long time. As you can see here, all the way back to 2023. That would be, of course, significant. But for now, this still looks pretty bullish to us, because we don't see that full impulse pattern to the downside developing. But we do want to see now price break above this downtrend line to fully confirm this 3/C wave. So this is our preferred scenario, with a first warning for the bulls below yesterday's low, then a second warning for the bulls below Tuesday's low, third warning below the early November low, and of course below about 625 at any given moment. This whole wave count can be thrown in the trash, and then I'll give up on the miners forever. So we have a good risk reward setups here. We know which levels to watch, and I would always suggest wait for confirmation. Only add to winners, don't add to losers. So that's what we have here. So we've gone over all these nice little cryptos, what we're seeing in Binance Coin. At a minimum, another 5th wave higher to 850. Potentially, we are still in a 3rd wave, then a 4th, and then a 5. Bitcoin, we would prefer to see it close above 102, and then it can target that 113,000 based on simple symmetry for this ending diagonal wave 5 of 3. Then we see another pullback and another rally before we see a much larger correction. Okay, a much larger correction is looming, but not yet. And those corrections, as you can see here in 2021, can last for about half of the year. And then the other half of the year is reserved for bullishness. Just as we saw most of 2024 was a correction, March into August. Okay, that is March, April, May, June, July, 5 months of correction. And you can see the same here. We had 1, 2, 3, 4, 5, 6, 7, 8, 9, almost, this is weekly, many weeks of corrections. Okay, so this is started here in March and which bottomed here in the summer. So we might expect something similar for 2025. Okay, bullish initially, bearish through the summer, and then one last hip hip hurrah to complete, of course, our bullish cycle phase. Let's see if I can find it right here for the mature bull. Right, we're now entering the mature bull, and just wanted to show you here this wave 4 here was also quite a steep correction. If we just go by Fibonacci retraces for fourth waves, this is actually in log scale, so it won't work as well. So we'll forget about that. But all of these are, as you can see, very steep corrections, these fourth waves. This fourth wave here as well is very steep. This fourth wave is very steep. This fourth wave is very steep. So that's the hallmark of a fourth wave with that 246, 378 as the next upside target for wave 5 of 5 of 5 of cycle 3. And then we get cycle 4 and another cycle 5. Okay. So also here, we don't see really Bitcoin peak out until probably early 2030s. Okay, so yes, we'll get a devastating bear market. That's for sure. In 2026, pretty much, because we're following nicely still this 4-year pattern with the 4 phases of Bitcoin. And we should expect then the same, starting a new bull in late 2026, which is still 2 years ahead. And for now, we're going to focus on the mature bull. And Ethereum, once again, can target 10 to 15,000. That is our upside target, continued on holding above, I would say, pretty much 3,000, right? If you drop below 3,000, things start to look dire from current levels. And we want to see first an impulse higher, all right? That's all I have for today. Take care, trade safe, and I'll catch you all next week.